Purpose of the financial. I mean, this one is an obvious one, but it's to provide an overview of the entity's financial condition. And that's really, both in the short and long term. Understanding the company's business, the notes of the financial, which is one of the most undervalued part of a financial statement. If you look on your financial, starting on page 6, those are what we call the notes. So the notes of a financial statement basically talk about everything related to the company that's important to the reader of a financial statement. If you look the previous 4 pages, you have your balance sheet, you have your income statement. Those are the actual financial activity, which is also the main purpose of the financial that everybody thinks of when they think of a financial statement. But nobody ever thinks of the notes. And the notes are really where you're going to get what I like to call the juicy details about the company. That's the information that is not going to be readily apparent by looking at a balance sheet. Before you look at a financial, the first thing you should do when you read a financial is understand the basis of accounting that is being used. Because the financial statement is only as important as the basis that it's on. And so we're going to have a little conversation about the different types of basis of accounting. So this way we understand the difference between the two. And the most famous is cash basis, which the IRS is using, and the accrual basis, which most financial institutions or private companies are using. And we'll go over the reasons on why that is in a bit. So modified accrual is a hybrid between the cash basis and the accrual basis, and we'll go over what that means. IFRS is not something that we're going to touch on today. It's an honorable mention. I put it up there because it's one of those bases of accounting that was taking hold to be very important, but there's been kind of a putback on IFRS for a bit, so we're not going to talk much about it today. So finally, cash basis. Record revenue when cash is received. That's the whole point of cash basis. Recording expenses when cash is paid. So this is real easy because you can relate to it in your own real life. As you pay something, you're going to have an expense. As you receive something, that's cash, that's income. And that's what the IRS does. That's what the IRS is looking at. If you receive money or value, you're going to record it. If you pay something, it's an expense.